Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 9, 2021. I want to talk about a video game stock called Zynga, ticker symbol ZNGA. They're into electronic gaming and multimedia. As you can see here, they got a pretty looking image here on their website talking about their games. And everybody loves Zynga, a lot of games. With that, let's jump in and get started. From a CEO review perspective, looks like we got Frank here. He's a CEO, very good approval rating, 97%. I think it's a great testament to CEO's leadership. I think, from a Glassdoor perspective and from what employees think about the CEO checks out. He's doing a great job. So with that, here the mission of this company is to connect the world through the games. That's a lofty mission. I think this company is really doing something nice here. Great mission statement. So with that, if you look at Zynga and look at their total revenue, I love the acceleration in revenue here, all the way from Q2 20, Q3 20, nice acceleration. I think that's a good one here. Total revenue up 59% year over year in Q2 21. So that's a very good achievement here. And also mobile revenue, I think that's growing nicely. More and more people are using mobile platforms like their cell phones, to play video game. I think that's growing very nicely. That's a great trend. Even if folks who go to work in their breaks, they can pull out their mobile phone and play some games in their break time. And even the advertising revenue, as you can see here, they're doing great on the advertising revenue. So that's also a good one. So overall, I see, there is some growth in revenue, especially in the mobile sector and also in the advertising area. So with that, if you look at the company profile a little bit, Zynga is a social game services provider in United States as well as internationally. They develop, market, and operate social games. That's a good way to go about. And they're also into Apple iOS as well as Google Android operating systems. I think overall, company is really making some stride here, and stock price is $8.11, still cheap, and the market cap is about $8.83 billion. As you can see here from a stock chart perspective, nice looking chart. They've been doing nicely. There are bumps on the road, as you can see here. But now after the quarterly earnings, stock has dropped big time and showing some signs of improvement, as you can see here. So overall, from a chart perspective, I love to invest in companies like Zynga. When they are dropping like this and pull back heavily like this, and showing some signs of improvement. And from a CEO perspective, Frank Jibu, he's CEO. He joined back in March 2016. He has been member of Zynga board of directors since 2015, and looks like he's really spearheading this company in the right direction. So under his leadership, company has really done a great turnaround and transition rapid growth. And before joining, this company Zynga, he was also with Electronic Arts for more than 20 years. So looks like he's really expert in the mobile gaming and the entertainment industry. So I think he's the right guy at the helm. He can take the company to new levels. So with that, as we look through the news items here, looks like Zynga plunging after the earnings. Zynga tanks as booking soften. So this is where folks are really worrying. Last year, 2020 was good for these mobile game players and stocks because everybody, it's a lockout period. Folks were playing games at home and trying to relieve their stress. But now, with the companies reopening and markets and the workplace reopening, there is a little bit softness. That's what is this company experiencing, a little bit softness in their booking and also user acquisition cost raise. With that, I think that's the main news here. Folks are wondering the great reopening, can it hurt these video gaming stocks? With that, let's jump in and look at competitive landscape and see what we can make of. From a competitive landscape perspective, as you can see here, I've got a few companies in this video gaming entertainment area, and I sorted them by 1 year performance. Company at the top, Score Me, $32 stock, had done great, 547% in 1 year. And from there, it's in a descending order or a decreasing order, as you can see here. I always look at the sales growth, very important. As you can see here, the top company here, $18 million sales in trailing 12 months. And from a sales growth perspective, quarter over quarter, they've done great sales growth. Gross margin is zero. And then we also have to look at things like RSI to indicate is it a good time to enter. Right now for Score Me, RSI is 85, clearly above 55. I would not buy this stock at this time. I would wait for RSI to cool off a little bit and then I will buy. And then we got the performance. Good to look at the performance. As you can see here, in 1 week they've done 86%, 2 week 117%. I would rather wait for a little pullback here before I put my money to work. And then you got other stocks here like EGLX, INSE, all are doing great. Typically, you look at quarter over quarter plus gross margin greater than 40. We call it rule of 40. This clearly passes that test here, and they've done great, over the period of time from a performance perspective. As I look at the RSI, probably EGLX, you could still buy it. RSI is 46, clearly, good to buy as stock is really in the entry point right now. And as you scan through here, I also love, a lot of these stocks. I love SE. It's a, I think it's a Hong Kong or a Singapore-based company. As you can see, it's done great. Still at the 52-week high, almost at 52-week high. RSI 62. I would buy this on any pullback. And then you got a couple more, including Bilibili and so on and so forth. As you scan through here, pay special attention to the sales growth. Most of them are green, as you can see here, with few exceptions. And also pay attention to RSI. RSI will tell you that good time to buy right now, or should you wait? If the RSI is above, say 55, then wait for a little bit, wait for a small pullback. So with that, now we will look at a company called Zynga. So $8.11 stock. Good sales growth. I love the sales growth here. Quarter over quarter sales growth is 69%. Nice gross margin, 59%. And stock has fallen off or pulled back by 19% in 1 year. In 5 years, they've done still great, 188%. They're down 34% from 52-week high. So we will look at this company a little more. I also like the big players here like Activision Blizzard, Electronic Arts, Take-Two, even the platform-based play, software platform play Unity. It's also a good one to buy and own. All of these stocks, most of these stocks have got positive sales growth, as you can see here. EA and Take-Two, the big players here, they're showing some softness in quarter over quarter growth, but rather these are good players to hold for a long time and invest. And as you look through, we got a couple more players here like Roblox. Everybody knows Roblox. They're also doing great. RSI is 49, indicates you can still buy Roblox here. And even Game Engine, same story. RSI 39. Nintendo, one of my favorite players here. RSI 18 indicates completely sold off. You can buy some Nintendo at a bargain price here. With that, let's jump in and get started. Look at few charts of these companies and see if it's worth buying here. From a chart perspective, we talked about SCR Score Me. Right now, stock has shot up. I would not touch at this time. Let this come down a little bit, then we can buy this company. EGLX, on the other hand, you could still buy here. They just went over their one of the moving average here, which I think this is a 50-day moving average. I think this is still a buy here. You should probably look at this company and buy some. Stock price is still 548, showing some breakout from the trading range here. And then we got INSE. Again, nice looking chart here. As you can see here, their stock is also kind of thinking through right now where to go. RSI is 50. That indicates you can still buy the stock at these levels, and it's a nice looking chart here. And they also, I think, their quarterly earnings is coming up pretty soon in 3 days. Probably watch out a little bit. Typically, these video game stocks will trade wildly around the earnings. And then you got Avid here. As you can see here, stock has dropped. I think they had their earnings yesterday. Stock has dropped pretty badly. RSI at this point is 33. You should be able to buy some RSI at the low price here after the earnings. I think this one is a good one to play. And we look at a few more here. We got the SE. It's a great company. I would buy this company. Any pullback right now. Earnings is next 6 days. You might get an opportunity to buy this company after the earnings. Typically around the earnings, this company also trades pretty widely. As you can see here, earnings, stock fell off, earnings, stock fell off, earnings, same story. So this time it may not be any different. Stock has gone up before the earnings. There may be a chance this will pull back. That could be a good opportunity to buy quality company like SE. Then we got NCTY. NCTY, as you can see here, stock has not done great for a while. Right now it's showing some signs of turnaround. Next earnings is in 13 days. Because stock has sold off pretty dramatically, there might be a pop in this company after the earnings. Something to keep in mind. And then you got BILI here. Again, it's a great play. Right now, stock is kind of trading down, as you can see here. Next earnings is in 8 days. This one also, you might get some surprise and get a small bounce because stock has sold off before the earnings. Typically, you might be able to see a bounce here too. And then you got SLGG. This again, as you can see here, stock has been selling off. Earnings is in next 3 days. As you look at the company history here, stock has pulled back before the earnings, shot up, earnings went up. Right now, there may be a small bounce after the earnings as we go forward. Then we got a few more players here. We got Roblox. These guys had a huge IPO last year. Right now, stock is kind of down, as you can see here, showing some strength here. Next earnings is in 5 days. This one also good to watch out around the earnings. Because it's going up before the earnings, there may be a pullback after the earnings. You would rather wait for the earnings. If you want to buy a little bit, that's fine. RSI is 66. That tells you it's better to wait for a little pullback before you pull the plug. And then you got SCPL. As you can see, this stock is all over around the map. This one also is good to buy when there is a little pullback. Right now RSI is 60. Looks like they had earnings already yesterday. After the earnings stock went up. Good to wait for a little pullback before you buy this stock. Then we got Game here. Game stock has been selling off, as you can see here. And right now they're showing some progress, as you can see here. This one also, I think it's good to probably wait. I think this one is good to buy now. RSI is 43, tells you stock is sold off. If you want to buy some, you're okay to buy at these levels. Then we got Nintendo here. Nintendo is a great stock. They got great video games. Stock has sold off, as you can see here. I would buy some Nintendo. I think they had earnings yesterday and the stock sold off. You could buy some Nintendo. As you look at their history, stock is dropping. Earnings, stock went up. Earnings, stock went up again. Earnings, stock went up. This time earnings, stock came down. It's a good opportunity to buy some Nintendo, which is a quality stock, and hold for a while. Now we got a couple more here. These are the big daddies of video game as you can think of. We got Activision Blizzard, a great stock. Stock is sold off drastically after the earnings yesterday. I think it's a good one to buy at these levels. And then you got Electronic Arts. Earnings is 16 days. Stock has sold off mainly because EA stock dropped. It's a courtesy drop off here. I would pick up some Electronic Arts also at these levels. It's a great stock. And then you got Take-Two. Take-Two used to be an undisputed leader in mobile game, but off late, companies in news around, some corporate culture issues, stock has been dropping off as you can see here. I would buy some Take-Two at these levels. CEO Strauss Kahn will do great. I think I would buy some Take-Two Interactive also here. And then we got next chart here. As you can see, a Unity Software. It's again a great company. They're a platform play, pick and shovels. They have this video operating system. I would buy some Unity Software. Earnings is today, so you might want to wait for the earnings or buy a little bit at these levels. Given RSI is 57, I'm assuming there will be a little bit pullback after the before the after the earnings. That might be your chance to buy some Unity Software. And then you got here Zynga, our company that we will be looking at. Same story here. After the earnings, stock dropped. I think it's a good buying opportunity for Zynga. And then we got PLTK. I think their earnings is in 16 days. Stock went up a little bit. RSI 56. You can still buy this stock at these levels, or it's better to wait for a little pullback. I would love to buy stock when it's below 55 or so. Right now, good to wait for a little pullback given they shot up in last 2 days or so. And then you got BHAT. Stock has been falling, dropping off as you can see here. It's a 68 cent stock. I would probably pass on this. And then you got Skillz here. Skillz, as you can see, a stock has been dropping off pretty dramatically. It's a $12 stock. I would probably I would probably buy a little bit at these levels and and accumulate slowly and take it from there. So with that, let's focus on Zynga a little more. Zynga, as you can see here, they got some buy ratings on August 6th. With the their I think they also reduced the price target from 1450 to 1350, 12 to 10. That's a tell that even before the earnings on August 6th, these analysts kind of sort of knew the stock may not do great. That's why they kind of revised their estimate with the downward, with the downgrade here. So with that, as you can look through here from an earnings per share perspective, it's negative right now. Company is not showing much profit. And sales, they're doing great from a sales perspective. I love the sales growth here, nice clip. Shares outstanding, nothing negative here. I think they're doing okay from a shares outstanding perspective, pretty stable, nothing bad here. And from a fundamental perspective, it's a $8 company. Nice sales growth. I love the sales growth. $2.2 billion in revenue. That's a big number. And net margin is negative. Right now, company is not showing profit. And they do have some debt. Debt to equity is 0.5. Not great, but not very bad either. And as you scan through here, RSI is 15, tells you stock is completely sold out. You can buy some at these levels. And as you scan through here, performance is bad after this drop off. They've been doing badly in 1 week, 2 week, all the way to 1 year. They've done great in 5 years. They're 34% off from 52-week high. And as you scan through here, great trading volume here. You can get in, get out of this stock pretty easily. They do have some debt, as you can see here, $1.4 billion debt. They do have great cash, $1.3 billion. They do have growth estimate for next year. That's good one. And they do have a lot of free cash. They're spending money on R&D. I think these players have to spend money on R&D to have the cutting edge platform and cutting edge software. And I think they're below their 20-day moving average, below their 50-day moving average, and even below their 120-day moving average. So right now, stock is in a bearish territory. Good to buy some and hold for a while. And they've done great from a 5-year returns perspective. And I think operating cash flow is positive. So with that, let's jump in here and look at their fundamentals. From a fundamental perspective, as you can see here, the market cap has been rising slowly but surely. It's one of the steady eddy type stock. As you see here over the quarters, market cap has slowly but surely increased. After this drop in stock, as market cap has decreased, as you can see here. Same story, stock price slowly surely going up and up and up. So this is not one of those stocks you will get burnt out if you buy in this low bargain price. And sales also, as you can see, a pretty nice clip here. They're improving nicely. Right now they're at 720 million per quarter. That's a respectable number and nice growth clip here. And from a revenue surprise, as you can see here, they've been surprising Wall Street on the revenue side nicely. That's a good surprise. And quarter over quarter sales change is also pretty good. They've been giving nice quarter over quarter sales change. From an earnings per share perspective, as you can see here, this quarter it's in line, but sometimes they surprise on the negative side. Earnings from a surprise perspective, I think it's a positive surprise or in line for most part. That's a good one. I think this company is predictable from a earnings perspective. They're not negatively surprising, but this time around they give some little bit softer guidance for the future. That's why stock dropped off. And they do have good amount of cash. They have a lot of debt also on the balance sheet. Nice respectable gross margin here. I like this. Net margin is still negative. They do spend on R&D. That's always good for these type of companies. They got to bring out these new labels and cutting edge labels. That's good. Price to sales perspective, company is still cheap from price to sales perspective. Valuation is low. So in a nutshell, I love these fundamentals here. They're doing great, steady eddy company. Revenue surprise, EPS surprise is also positive, doing nicely from a quarter over quarter sales perspective. Nice gross margin. So overall, thumbs up for this company. This could be our buying opportunity. Next, we'll look at the performance here. From a performance perspective, this company is, they will go up and down, as you can see here. 2012, 74% down, 2013, 61% up, and so on and so forth. This company is not shy to, say what it is. So that's why, when they announce earnings, they will come out with the clear indication. Like this time they said softness in the in the future quarter. That's why stock dropped. So I think this kind of companies, it's good to buy when they drop, so you get a nice profit as it goes up and bounces back. And from a monthly performance perspective, as you can see here, 2 down months, nice up, couple of up months, down month, couple more down months, nice up, bounce back here, down, bounce back, 3 consecutive months down. This will be surely followed by some nice bounce back as you go forward. That's why I feel confident about this company. Whenever this company dropped off, it always bounced back nicely. And then we got here weekly performance. As you can see here, there are some reds here, but whenever they're red, they always came back. Here, huge red. Right now, they're already starting to bounce back a little bit. I would buy some at these levels and hold it for a while for a nice profit. And then you got here daily performance. As you can see here, earnings, huge drop. Now it's trying to improve. So I would probably buy at these levels. It's showing some turnaround already. It's good to buy and hold for a while. Now we look at monthly performance pattern here. As you see here, this will help us to identify, how is the pattern from a monthly performance perspective over the years. As you see here, there are more reds than green, as you can clearly make out. And one thing I would, kind of let you see here, whenever they're down so drastically, watch here, they're down for continuously, 5, 6 months here, but that's followed by nice performance, in the following months, 61% up. Same story here, down couple of months here, and they're okay from a performance here, but they've done great here. So this is where, if you time this stock right, when they drop off so drastically, for example this 45% drop, and this as you can see here, this 13% drop, whenever you see these double digit drops, it's good to pick up some of these, some stock here, and double down as it goes further down, so that way you get a good profit potential. So this is one of those stocks, if you want to buy and own for a long time, you could buy on these drops. But if you want to trade in and out, look for steep drops like we're having now, and it will always bounce back. As you can see here, if you look at off late, 3 down months, then went up, nice, nice bounce back. 2 down months, nice bounce back. So off late, as you can see here, they've been doing nicely, even though in the past they had severe, reds here, consecutive months, but off late, they always bounced back nicely. So that's a pattern for you. So that's why I feel like, even though they're down drastically, don't worry, buy some and keep adding, and you'll get a nice profit potential. So with that, if you look at the 5-year weekly chart here, nice looking chart. Stock has not done much here till 2019. Then stock has caught fire, done nicely. Now with this working from home kind of fading away, stock has dropped drastically. Some sign of turn around right now. So I would buy Zynga at at these levels, and hold for a while. Now we'll also look at a little bit 1-year daily chart here to get a better idea. As you look through the 1-year daily chart here, stock is earning, came down, earning, stock came down, earning, stock came down. Same story here, repeatable pattern. I think here after the earnings it went up. So what I would do is really at this point I would buy some here. Given RSI is 18, stock is kind of sold off completely. I would buy some Zynga at these levels and hold it for a while. And right now chart is ugly. RSI dropped off. Implied wall is kind of okay. It's right now still low, 28%. Even if you're a put premium seller, you will not make too much money selling put premium here. And then you got volume average here. It's picking up right now. People are trying to buy the stock. Check in money flow, smart money is flowing out, which is very much expected when the stock drops off like this. Now smart money will start buying and accumulating the stock. That's what we should do also. So with that, if you look at the option chain here, always I look at option chain that tells you what option is telling us and what the big players in the options market are doing. As you can see, our stock is at $8, and we got $8 strike price here. Lot of call volume, above $8 we got here, $10, and even if you see here, we got even at $12. Lot of call volumes here, even at $20. So that tells you in the option market, people are betting this stock will go as high as $20. That's a huge number at at $20, and there's a respectable number at $10. So clearly there's a good chance that this stock will go higher. And there is also a good amount of put volume at $8, and so on and so forth. But the put volume is nowhere near the call volume. That's why it's a bullish indication as you look through the option market. In the option market, participants are betting this stock will go up. And then you look at the option statistics here. Call contracts 70,000, put contracts 7,000. So clearly call volume is way above put volume. That's why put call ratio is 0.1. It's a positive indication that this stock is really has good upside potential from here. And now let's quickly look at the quarterly earnings transcript. We got CEO Frank Jibu. So as you can see here, they miss by 9 cents here, and they beat by $40 million. That's a little bit. I think this is a little bad because they missed on the earnings per share. But overall, looks like they delivered a strong result, best ever Q2 from a revenue and booking perspective, and their the Q2 revenue is up 59% year over year, and bookings up 37% year over year, and looks like they got the highest Q2 operating cash flow. That's all also good, and their franchises are really leading. They're doing very well in the mobile gaming area, and from a product perspective, best in class data science, best in class product management. They're also acquiring new users, and they're also doing great in their advertising capabilities. And they're releasing the new innovative games, and they're beating and attracting the players. That's a good story, and looks like their new Discord fever has beat. They're doing great in this video game here, and they also are doing all-time high best advertising revenue and fastest growing hyper casual game company in the world. And you can see a lot of good things here. Now on the negative side, or the downside, looks like they're a little bit worried about this Apple's privacy changes. It's creating some choppiness, or it created some choppiness. And also they're also a little bit worried about the reopening play, and that might they might see some softness as more and more people go to work, and they think that's a little bit short-term phenomenon, and they can weather through this in the long term. Given those dynamics here with the Apple's privacy policies and this softness with the reopening, they're predicting, or they're adjusting their outlook to be a little bit lower. As you can see here, now they're saying 665 million for the Q3, and they've done around 720 million or so in the Q2. It's a little bit softness in the guidance. That's why Wall Street did not like it. Stock kind of dropped off after the earnings. Could be a good buying opportunity in my mind. So with that, if you look at the insider trading, as you see here, we got Ryan and Mark. All these guys are selling. As you see here, we got a respectable volume here. 1.8 million, 3 million, 14 million. I think this director Mark is pretty aggressive in selling his stock, looks like. And as you can see here, Mark again selling some more. So insider transactions are negative. That means negative 48%. Insider selling a lot of shares. That's a little bit negative sign. That's putting some pressure on the company. It's basically shares outstanding will go up as these insiders sell aggressively like they're doing here. And institutions are buying slowly. That's one of the reasons stock is not taking off. Coupled with the earnings, where they basically predicted some softness in next quarter. So with that, what do we do now? So Zynga, as you can see here, stock tumbles 14% as it trims the booking guidance amid of audience and softness. So I think this is the main thing, because they showed some softness in the guidance. Stock tanked big time, and overall they delivered a strong result, and best ever bookings, best ever revenue and operating cash flow, and they have a lot of new labels and new games. I think that's a good one. They have this R&D, research and development engine cranking. That's a good one. And their teams are releasing new innovative bold labels. That's always good. And in the short term, they have some market dynamics they have to work through, including the Apple privacy issues and this great reopening. That's also causing some softness. I think they have to watch out this. They feel it's a short term nature. I agree with them. They can weather through this easily. At this time, stock is oversold, I'm buying this stock at this time and accumulating slowly. I think we should see a good profit potential as we go forward. So with that, thank you very much. Happy investing and trading.